Hello, I'm Novelette and welcome to Morgen Talk. My guest today is Mark Turok, Business Development Officer at Exeter 1031 Exchange. Okay, Mark, what is 1031 Exchange?
So a 1031 exchange is a method for deferring your capital gains taxes on real estate transactions. And more specifically, it's for rental property, investment property, or if the property is held for business use. And like if you if you have a warehouse and you're operating the business out of the warehouse, if you were to sell that property, you could 1031 exchange that into another property. And there's a lot of different options for our clients as far as what they want to go into, because I do get a lot of questions about that. I'm sure we'll dig into that even further, but it's a tax code. It's 1.1031 of the Internal Revenue Service code. And in fact, I can read it to you. It's the tax deferral strategy that allows an investor to sell rental, investment, or business use assets and defer those payments of the income tax consequences by reinvesting in qualifying use like-kind replacement property. Again, that's 1.1031 of the Treasury regulations. So it's ultimately, this is a wealth building tool, I like to tell people. And it's been around, the other thing too, a lot of people don't know, it's been around for 100 years next year. So it's got a 100-year anniversary coming up. So it's been around a long time. It's been, obviously, there's been revisions and different tax code changes over the years. From years ago, you could do personal property type of transactions, planes, cars, different types of assets other than real estate. But after the most recent tax code revision, that has been shrunk down to just real estate. So we always like to tell people it's real estate for real estate now, just to keep it simple for people.
Gotcha. And so can you define a bit more what is like kind?
Right. So like kind, again, that like kind exchange is a real estate for real estate, and which is single family residence, could be, multifamily, could be mineral rights, air rights, water rights, Delaware statutory trusts. Those are all qualifying, like kind type of properties. So.
Mm-hmm. And how does one get started with a 1031 exchange?
Well, the main thing I tell people is if you do own rental property and, like I said, investment property, and you're going to do an exchange or you're thinking about it, call us early in the process. That's the best way to handle the questions that come up, and they do come up because it's a very niche area, and a lot of people don't know much about it. So I tell people, when you're thinking of putting the property on the market or planning it out ahead of time, give us a call. We'll walk through the steps. As far as like the timeline of how long does it take us to put together an exchange for the client, 24 hours. If we have all the documentation from our client, we send out an application, we speak with their escrow and get all the documents that we need to, form our documents, our exchange documents for the client, and to make everything, put everything together for them. But if we have everything, it's one day. But I always tell people, give me a call, especially like when you do open up escrow, and if you're going to do one, just give me a call. We'll get the application going and get you started.
Okay, so is the investor calling you directly, or do they use an agent to call you? Is there an option, or how does it work?
Yeah, it's everything. So I do have clients that will call me, investors, they'll call me directly, and they'll get a referral from somewhere, heard about us, saw us online, saw one of our podcasts. And I do have real estate agents that call, escrow teams that call. Like it's so many different ways that we get clients. So it's a lot of referrals for sure.
Okay, so then what is the tax consequence of doing a 1031 exchange as opposed to just buying it all just cash to cash?
Well, again, so you're going to be paying, like, especially in California, I'm in Southern California, and if you're doing a transaction here, the tax consequences are enormous. I mean, you've got the federal, state taxes, along with the healthcare tax, all the different taxes that do impact the transaction. And for a lot of people, I mean, it's a significant hit. And this allows, the 1031 exchange allows the investor to defer those capital gains taxes off into the future. So if they keep swapping properties, for the next one, if they keep doing that throughout their lifetime, they will not have to, pay those taxes. I mean, to the point where they pass on, and their heirs will inherit that property free and clear with a step up in cost basis. So it's a tremendous, like I said, wealth building tool. And I look at it as just a good way for people to, try to, like I said, build upon that nest egg for the family and keep the money working for them. But again, it's the tax consequences that are really severe, in certain states, that make this a really important tool.
Okay, and so roughly what is the cost to facilitate 1031?
Yeah, so I would say, we're all about the same. There's other qualified intermediaries out there. We're all roughly about the same as far as the fee that we charge, but we do charge around $8.99 to do one transaction. So that would be one sale, one purchase. And if there's additional properties involved, we usually we'll charge a flat fee of $300 per additional property after that. And that's right there alongside with all the other QIs. We're all about the same. You'll see anything from the high of like 1,300 to low 750, but they're somewhere in there. What sets us apart is we're more consultative and advisory, where most of your QIs will not necessarily answer the questions or pick up the phone. We'll talk to the client. We'll work with them, work with their CPAs, their tax advisors, and help them through this process and understand that process. So.
Excellent, thank you. Now, is there anything else you'd like to add before we go?
So yeah, just another thing I do mention to people, when you're looking at 1031 exchanges, recognize it is real estate for real estate, and you have a lot of options. We mentioned earlier, single family residence, multifamily, commercial buildings. You could do vacant land, farmland, oil rights, mineral rights, TICs, Delaware statutory trusts. So there's a lot of options for people to go into. And I also tell people, like, when you're talking to other QIs out there, ask them if they have any government oversight. That one thing that also sets us apart is we do have government oversight. We have our own trust company. It's Exeter Trust Company. And so this allows us, to say we are licensed, regulated, and audited by the Division of Banking in Wyoming. So everybody that works with us, gets an exchange through us, they'll be set up with a qualified trust account. And it's just good to know that they have that added protection, because the industry itself is not regulated. A lot of people don't know that. So you want to go with a company that has regulation oversight, and significant fidelity and bond coverage. And those are the questions you just want to ask as you're looking around.
Gotcha. Thank you so much for talking with us today. It's been very informative.
Thank you very much.